Hey guys, how's it going? It's Nolan. So one of the many questions we get asked is about patterns in price. You hear so many different patterns like double tops, double bottoms, flag patterns, etc. Well, one of the most common patterns that we get asked about is head and shoulders, and what is a head and shoulder pattern? So I'm going to dedicate this video today going through the head and shoulders, giving you an ultimate guide to what they look like and how to trade them. So before I do that, I'm just going to give you a very brief tutorial on trends. Okay, so let's just say we had what we call an uptrend. Now I'm going to show you what I mean by an uptrend, but let's just say price was going up on average. Okay. Now, price wouldn't move in a straight line. It would move typically like this. We'd have what we call our impulse move, a correction, impulse, correction, impulse, correction, impulse, etc. And what you would typically see is these highs getting higher and these lows getting higher as well. And that is the technical definition of an uptrend, when price is making higher highs and higher lows. Now, similarly, in a downtrend, price, if it was moving to the downside, it wouldn't move like that. We typically see our impulse, our correction, impulse, correction, impulse, etc., etc. And these lows would get lower and these highs would get lower as well. So what is a head and shoulder pattern? Well, a head and shoulder pattern is called a reversal pattern, and it shows us the reversal from an uptrend into a downtrend. So where we have an uptrend with our higher highs and higher lows, what we typically be getting is something like this. And what a head and shoulder pattern is a fancy name for a change of cycle. Okay, here we can see our uptrend making higher highs, higher lows. Then all of a sudden we get this lower high here. Okay, where we've made a higher high, a high, higher high, higher high. All of a sudden we get this lower high here. And then we make a lower low and another lower high, etc. And you can see that change of momentum from this uptrend into a downtrend. So head and shoulders is a very, very fancy name for a change of cycle. Now, here is our head and shoulders. Okay, we have our left shoulder here, our head, and our right shoulder. So let's just put some little circles on there. We'll clone that. Oops, I want to clone this, and let's clone it again. Move that over there, move that over there. So write some words down here. So this would be our left shoulder. Might need, I know that the font size is fine. So left shoulder there, head would be here, and here would be our right shoulder. Let's just make that a little bit bigger. There we go. Okay, and also what you would look for in a head and shoulders pattern is what's called a neckline. Okay, and that is basically support. Okay, so price makes a higher high, it moves down, finds support, it makes another higher high, moves down, finds support again at the same support zone, support area. It then makes a lower high or a right shoulder, but actually breaks the neckline. So this support, I'm just going to, we do call it a neckline because we're talking about a head and shoulders, but in this case it's also a support because price bounces off it. And what we do as traders, when we've identified this, to trade this, what we do is we wait for that move and close below the neckline. Okay, so we want that support to be broken telling us that the sellers are now in control of the market. And what we look for is price to come back, retest and reject the neckline, and that is where we look for our sell setup. So, you know, here you could be looking for typically an evening star pattern, which is a 3 candlestick pattern. You may look for an engulfing seller candle, or you may look for what's called a shooting star candle, some kind of rejection, some kind of candle or candlestick pattern which is telling us we should be looking to sell. And that would be after a retest of the neckline, so a break and retest of the neckline. Now, okay, brilliant, but you know, where would we target? Well, where you would target is this. You would actually measure the distance from the head to the neckline. So if I just do that here, I think there's a, price, is it price range? Not too sure. We'll do that one. But if I take that distance there, it's around about 120 pips thereabouts. Now that would be your target, but your target is from the neckline down. So if that is 120 pips in that case, then what we'd be looking for is the same distance to travel. Okay, so we'd be looking for a 120 pip move from the neckline to our target. So any trade you take here, any sell setup, if you get one, your target would be the same distance. Okay, so I have got a few examples for you, which I'll show you in a second. One thing, actually a couple of things that I do want to mention is this is the typical technical way of describing a head and shoulder pattern. One thing I want you to notice is that the left shoulder and the right shoulder aren't necessarily in line with each other. Okay, you could have a right shoulder up here and a left shoulder down there. Okay, as long as that right shoulder is below this head. Why? Because it's a lower high. Also, you know, we could have something like this. Left shoulder, head, right shoulder, because this is a high, this is a higher high, and this is still a lower high. Okay, so I don't want you to get it in your head that this left and right shoulder are on the same level, which typically, you know, if you were to go onto the internet and Google a head and shoulders, that's the typical thing you would see. And I don't want you to go away from this tutorial thinking that that's the only way a head and shoulders would form, because it can form like this. Okay, you've just got to remember that it's a high, higher high, lower high. Okay, that is what you're looking for, and it could be anything like, you know, what I'm showing now. And the technical way to trade it is wait for the impulsive break below the neckline and close below the neckline. Look for that retest and look for that rejection here. So what have we got here? Aussie CAD. I found something here. One more thing actually. One more thing before I show you the example is the neckline. Although, you know, again, if you go on Google, etc., and Google head and shoulders, you'll see this neckline as basically a horizontal line or a horizontal zone. It doesn't have to be. Okay, so let me get rid of that. Just move these over here for the moment. The neckline doesn't have to be flat. It can be a sloping line as well. So we could get, I'm just going to move the wording down to the bottom there. That's it. We could get something like this. We'd still get our high, bounce off the neckline support, higher high, but the support or the neckline is a rising support, and do something like that. Okay, so get it out of your head that this neckline has to be flat. It can be sloping as well. So that is also a head and shoulder pattern, whether that right shoulder appears there, as long as it's lower than this high here, which is the head. Okay, it's a head and shoulder pattern. Let's just put that back in. There's our left shoulder, there's our head, and there's our right shoulder. But typically, like I say, you would see this neckline as flat if you were to look up in a textbook or wherever, but it doesn't have to be. So a couple of things there. Neckline doesn't have to be flat. The right shoulder and the left shoulder aren't necessarily in line with each other. Okay, so I have an example here. This has a flat neckline. Now this was Aussie CAD in April 2022, so April this year. Okay, so what we can see here is, what I'm going to do actually is use the replay function on this software. There we go. So remember, a head and shoulder signifies the end of an uptrend, and so we'd be going from an uptrend into a downtrend. So what we've seen here is this, you can see this big up move here, yet we have a big pullback, but we continue to the upside and form this new high. But what we've actually done is, and let me grab my, if I can find them, my right shoulder, let's delete that, right shoulder, head, the left shoulder indicators, because I'm going to use them now. So this here would be our left shoulder. Okay, we move up, we find a high here. So this is our high. We then make a higher high. So this would be our head. But then we make this first a lower high, which is here. So that would be our right shoulder. And what you're seeing is price bounce off this neckline here. So eventually, it's support, it's another name for support. Eventually price breaks through. Okay, so as a trader, what we do then, we are patient and look for price to come back and retest the neckline. And what we have here is one of the patterns, candlestick patterns that I mentioned earlier to look for, and that is what's called an evening star pattern. I said it was a 3 candlestick pattern. So an evening star pattern starts off bullish, and it's almost like, throwing a ball up in the air. Eventually it gets to a point where it slows down and actually stops, and then it starts to reverse and falls downwards. Think of an evening star pattern like that. The ball is going up, it starts to lose momentum, it stops, and then starts to fall down. So this here is an evening star pattern. So, if we were looking to trade that, okay, so we've seen the head and shoulder pattern, we wanted to trade this, so let's just say we wanted to go short underneath this candle and the stop above the high. Where's our target going to be? Well, if you remember, our target is the same distance as the head to the neckline. So what we do is, if I can find that little tool again, price range. So we go from here, measure to the neckline, and that's around about 172 pips. But we can see the tip of that candle there. So that is what we'd be targeting, something like that there. So that would be a 1.87 to 1 trade if that triggers. So let's see what happens. So does that trigger? And yeah, it does. Boom, job done. A 1.87 to 1 trade, just identifying a head and shoulder pattern. Retest the neckline, absolutely textbook, and job done. Let's take a look at another example. So this one was Aussie CAD. I have another one for you, pound USD. Another one with a flat neckline. Not that it makes a difference. It could be a sloping neckline, but just wanted to show you. Can you see that left shoulder here? That high, higher high, lower high. And we have our support here, which we call a neckline. And then we have a bearish candle close below, 30-minute candle. It's a 30-minute time frame. And then again, look, we get this evening star pattern, 3 candlestick pattern, pushing up into the neckline and then rejecting it. Okay, so let's just say we were going to sell this evening star pattern. So we'd have a sell underneath the candle, stop above the high. Where are we going to target? Well, we've got quite a decent size target by the looks of it. We'll just get our range here from the tip of the higher high, or the head in this case, to the neckline. It's about 73 pips. So okay, so if we go from the neckline here to the target area, which would be 73 pips, we'd be doing something like that. Now, because this is a lovely evening star pattern, the candles aren't that big, we get a small number of risk pips. So we get about 16 pips at risk, but we're actually getting you know, a decent reward. It says something, oh yeah, we're getting, although it's a 73 pip target away, when we've actually set the trade up, it's actually about a 66 pip target. Okay, and that is over a 4-to-1. So let's just see if it triggers, and does it actually hit the target as well. Okay, it triggers with a fairly decent selling momentum candle. It hovers about a little bit. Remember, this is only a 30-minute time frame. Just going to extend that across a little bit, so you know we can see that we're about 3.4% up at the moment. So you know what, if you wanted to even close the trade at this point, then I wouldn't hold it against you, because that is such a good result. And boom, there we go. So over a 4-to-1 trade, so risking 1%, that's a 4% result. You know, £100 risk, for instance, that's a £400 result, which is over a 400% return, just from being able to identify the pattern. Yeah, and it's as simple as that. You can look for a head and shoulder pattern on any time frame. Okay, I mean, I've shown you this on the 30-minute. Aussie CAD was on the 4-hour, but it can be on any time frame. And I'm just trying to think if I missed anything else out. I don't think I have. Just remember, it's a fancy name for a change of cycle from an uptrend into a downtrend. Okay, where we see in an uptrend higher highs, higher lows. You're looking to identify that first lower high, which is our right shoulder. Then once we've broken that neckline, then you're looking for that pullback. Okay, that retest and rejection. It wasn't going to be the subject. It wasn't going to be the subject of this video, but you will also hear an inverse head and shoulder pattern. Okay, now basically that is just the opposite of a head and shoulder pattern. So if the head and shoulders pattern is a reversal pattern from an uptrend into a downtrend, and let me get my drawing tools out. So the head and shoulder pattern is basically signaling an uptrend turning into a downtrend. An inverse head and shoulder pattern is basically signaling a downtrend. Where am I looking? A downtrend into an uptrend. Okay, so all I'm going to do is I'm just going to flip this chart on its head like so. And yeah, this would be your left shoulder. Let's get my circle out. Can't find it. Where is it? Where is it? Where is it? There we go. So this would basically be our left shoulder. This would be our head, although it's an upside down, obviously head and shoulders. And this would be our right shoulder. So basically, we've got our low, our lower low, and a higher low, okay? Because remember, we've got our downtrend where we've got lower lows, lower highs. All of a sudden, we've got a low, lower low. We get a higher low, okay? That is our kind of a way of signaling to us, okay, we could be seeing an inverse head and shoulders pattern here. We identify the neckline, wait for the break, and then we look for the retest to go long in this case. Okay, and it's exactly the same way to calculate your target. You would go from the head here, or the lower low to the neckline, and we'd basically be measuring the distance from the neckline, in this case, to 74 pips, because that was the number of pips from the head to the neckline, and it's that simple. So head and shoulders pattern, inverse head and shoulders. Inverse head and shoulders is just the opposite. Okay, nothing more to it than that. You measure and calculate the target in the same way, but you're looking to sell with a head and shoulder pattern, and you're looking to buy with an inverse head and shoulder pattern. So I hope that all makes sense. Now, if it doesn't for any reason, drop some questions into the comments and we will get back to you. And you know, we want to make sure that you understood everything, but if you didn't, just drop us a little note and we will reply to you. Hopefully you understood everything though. Hopefully you found it informative and you know how to trade a head and shoulder pattern or an inverse head and shoulder pattern from now on. Listen guys, thanks for joining me and look forward to seeing you in the next video. Bye.